The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Ladies and gentlemen, welcome. I'm your host, Asha Smelly, Assistant Manager Sales. Thank you for joining us for a special investor briefing where we will be looking at Mayberry Jamaican Equities Q3 results. On panel, we have Mr. Gary Peart, representative of MJE, and apologies on behalf of our chairman who is unfortunately not able to be with us today. If you are a fan of the content, then don't forget to subscribe. Also, hit the bell to stay up to date with the channel. We upload content just like this once a week. I remind you that we will be having our Q&A segment, so stick around until the end of the program. If you want to embark on your investment journey, take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Now into our presentation on Mayberry Jamaican Equities Q3 results. So we're taking a look at the financial highlights for the 9 months ended September 30, 2023. On screen, you should be seeing the total assets up 8.4% over 2022. To record $24.7 billion. Total equities attributable to shareholders decreased by 6%. That's a pullback to $17.7 billion. The net book value per share also had a slight decrease of 6% when compared to 2022 to end the quarter at $14.76. Sorry. The share price slightly declined over the 2022 period, ending the quarter at $10.07. The company recorded a loss per share of $1.78, comparable to $3.45 EPS last year this time. Total comprehensive income of the company decreased also by 149.7% to 1.9 billion, compared to 3.9 billion earned last year. Looking at the company's comprehensive income over the period, the company noted that the decrease was attributable to net unrealized losses on investments in associates, and that was $2.2 billion. The company, however, indicated that there was an increase of 13% in dividend income, totaling $56 million for the period. A further look at the company's balance sheet or their financial position, we note an impressive increase in total assets, up from 22.8 billion to 24.7 billion. Total liabilities also increased slightly to $7 billion, while shareholders' equities slight decrease to 17.7 billion. It's important to note that the net book value per share decreased by 6%, as alluded to earlier, to $14.76. Looking at the company's additions and disposals over the quarter, And I know it is something that our investors tend to look at when it comes to MJE's purchases. We're noting a significant addition to their top five, which is NCB, and a significant disposal for Q3 2023 was Caribbean Cement. So once we are in the question and answer section, we'll have Mr. Perry speak to that, indicating what outlook they have on the specific companies that they added to the portfolios and companies that they also exited. Looking at the top 10 largest shareholdings by value, we're seeing where SVL retained the top spot. There is also a new addition to that portfolio, the top 10 of Dollar. It was not there last year, and we're seeing where a few companies are no longer represented in the top 10 holdings of MJE. As was alluded to earlier, the NAV has been trading lower quarter over quarter. We're seeing where the NAV closed at $14.76, comparable to $15.70 for the period last year. The share price is also lagging slightly behind the NAV, closing the quarter at $10.07 compared to $11.97. But it is important to note that a company such as this, the value is based on the total shares in the portfolio, which is the NAV. So you're looking where the stock price is trading at a discount to the NAV. So if it is that you are a wise and savvy investor, it would be an indicator as an entry point or an opportunity for you to capitalize on the discount that you're seeing there. So as we move through the program, I will just kick off the questions. The first one is to Mr. Peart. So the first question is, what is the outlook on the current market and the economy in light of the IMF's downgrade of Jamaica's projected growth forecast?
We see where the market has actually been, a slightly declining path since the start of the year. And in a sense, I think where that forecast is concerned, the market was a leading indicator of that. In the sense that, whatever the projections were before, you're not seeing that being reflected in the company's results. So I think the forecast revision was not all significant, and it depends again on how robust the final quarter is likely to be. As I said, despite a lot of the increases you've seen in wages, etc., it hasn't passed through the different company results, so you're not seeing results from these companies, especially for the third quarter, that's blowing anything out of the water. So I still think we have some choppy waters to go through. We've seen where the Bank of Jamaica is indicating that, on the balance of probability, interest rates might go higher before it goes lower. And as you know, higher interest rates is not ideal for the stock market. But when you manage a portfolio of this size, it brings up opportunities in the marketplace for you to get volume. And because of our size, when we come into the market and need volume, you have to be buying when other people are afraid. And so it's a perfect time for an entity like us.
Thanks for that, Mr. Peart. Let's just throw over to social media. We have a question from Mr. Philip Burgess, and it says, I noticed the additional stake taken in Main Event. That's a company with very few shares outstanding. What is the thinking behind adding it to your multi-billion-dollar portfolio?
Well, we already have a material stake in Main Event, and what we're looking for is long-term value. So as the prices come off, it's an opportunity to get shares because it's still a company that's closely held. We think you haven't even started to see the full potential of main event. And I think over the next 2 years, it'll be an exciting stock, an exciting company, an exciting place to be. And we're positioning ourselves for that. You'd have seen coming out of COVID, their resurgence has been very, very good. If you look on what has happened with the stock price, the third quarter numbers weren't their last set of numbers wasn't ideal. But again, based on the cyclical nature of what we're seeing in that business, you'd have realized that, especially in the entertainment side of stuff, coming out of COVID, you had a backlog, for want of a better word, of people wanting to be out there. And you started to see increases in the number of events in non-traditional times that had significant demand from consumers coming to enjoy themselves. I believe we're getting to a space now where we're getting back into the cyclical nature of entertainment and how entertainment was operating pre-COVID. And I think that manifested itself in their last set of numbers. But again, it's a preeminent event management business in the country. And I think as entertainment increases on people's agenda, main event will do very well.
Thanks for that, Mr. Peart. Another question with regards to MJE's cash position. Shouldn't the company prioritize holding cash?
So, from an MJE perspective, one of the delicate balances that we have had to work with is, it's fundamentally a portfolio to generate value, long-term value. At the same time, we have shareholders who want dividends. And, so even though we're not a high dividend paying company because we're generating gains to reinvest, we still have to balance that. And so when you speak about the cash position, you'd have seen in our due to parent, MJE has taken out a margin position with Mayberry. And they've used that margin to acquire shares in companies that we think are undervalued. And, it's an opportunity, as I said earlier, to get volumes in companies that you wouldn't normally get when people aren't worried about where the market is going to be. So our debt levels are pretty manageable. It's about 40% of our total equity, which is pretty low for a fund like this. So we have other levers and liquidity levers that we can draw on, which is not necessarily cash. And one of the things you'd have noticed if you look at our numbers a bit carefully, you'd have noticed that despite the fall off in the unrealized loss, our cash from dividend income has actually increased. And we expect that to continue to increase, especially with the investments that we have made and continue to make.
And you would have answered one of the questions that may have highlighted from the increase in liabilities. So
Yes.
I'm happy that you covered that. Given the market pullback, how does MJE identifies additions for its portfolio? Specifically, one of the major additions that was made in the quarter was NCB. So could you walk us through how you decide to add which companies to the portfolio over the quarter?
Well, there's an adage that, when people are afraid and bailing, it's a good time to get in. And so, I think NCB out there, I think the public profile out there has gotten a lot of people afraid. But when you look at when you look as a manager, you have to look on the metrics. And I think the metrics surrounding NCB requires an entity like MJE to start taking positions. You don't know when the final turn will come, so you have to start taking positions. And I believe this is an acquisition that, once the new management team and the new direction has been finalized, I wouldn't be surprised if within the next 6 months, NCB announces a dividend. So you're going into a play that can give you capital gains, and then ultimately in a relatively short period of time, you also get dividend, which from the prior questions, when you talk about liquidity, in a bear market, you want to be able to acquire stocks that not only can give you capital gains, but also a cash flow from dividends. And, now is a good time to get material positions in a company like NCB. Before this time, it's always difficult to get volumes of shares. You have to push the price up. Know that when a lot of people are afraid and are selling, we take a position, and we did take a starting position in the entity just before the third quarter. We continue to look on the bank. As I said, it's a very strong institution. They've announced that they announced the intention to do an APO. We don't know if that might change, because one of the things that we look on is the rate at which they grow their profit. And it's an entity that, if given time, based on the rate of profit growth and how things change, it could be possible that, you don't even see the IPO. And if that happens, the price is going to jump again. And as I said, it jumped further when we believe dividends will come back on the table.
Thanks, Mr. Pert. So, given the high interest rates and the high inflationary period that we're currently in, and we're seeing its effect on the market, what is the outlook of MJE heading into Q4 and into 2024?
High is relative. There's a time, certainly in recent past, if I had said to somebody, interest rates were 14%, which is where they are now, we would have died, because at that time interest rates were 25 and above. So, it's relative. So yes, it is higher relative to where it's coming from, but it's required given where we are with inflation. And like with everything, once interest rates go up, the market is going to cool, not just the stock market. And people need to remember, the stock market is just basically a window for you to look at the best companies that are in the country. So when those companies pull back, you see the indices come back, but it is because of what is happening in the profit and losses of those companies. So as interest rates go up, depending on which business it is. So, for example, a company like Carreras is an entity that some people could look at, because they generate significant amounts of cash. So a higher interest rate environment will materially move the interest income that they earn. On the flip side, if you have a company that has high leverage, the higher interest rates is going to impact their finance costs. So again, we are looking now to position in companies that will benefit from a higher interest rate. So, for example, coming back to the example of NCB, we see where banks are able to move their loan rates faster than their deposit rates. So in an increasing interest rate environment, you will see, especially large commercial banks like NCB and Scotia, you will see their profits start to increase materially, because their spread is going to get wider. And on their excess cash or their free cash, they're earning a higher return than they would have done in relatively risk-free instruments, which are government of Jamaica bonds. So if you think about it, if they had, let's use a round number, $100 million last year, and the overnight rate is 1%, you're only making $1 million. Now that it is 5.5%, you're making 5.5 million. It's 5 times greater. And you know what their deposit base is? I mean, it's almost at, I think, $1 trillion or more. So those numbers add up pretty quickly. So again, that's why we like it. Once you get past the drama and the soap opera, we think it's a good buy. So, now is the time. You don't want to wait until BOJ says, hey, we're going to drop rates, or you get a notice that inflation is going to drop materially, because everybody's going to be coming to the market at that point in time. So sometimes you have to be a first mover, and you have to dip your foot in the water when it's not clear to some or to most. And so I think whether this upcoming quarter or the March quarter, I think we're likely to see a turn that will be positive for the market, if not earlier.
All right, Mr. Pert. So another interesting addition to the portfolio has been Dollar Financial. What can you indicate to the investors of this specific stock addition to the portfolio? Last year, it was not in the top 10. This year, it's now 2.3% of the entire value of MJE is $2.24 billion. So any important information that we should note regarding Dollar, and any opportunities that you see there as the asset manager that other persons may be able to capitalize on?
I'm trying to give you all the secrets. But there are certain aspects of this that has been public. So, MJE Mayberry owns 50% of MJE. The public owns the other 49 point odd percent. So we as a manager, we think that Dollar is probably the best, if not the fastest growing microfinance business out there. And as you would have known, Mayberry, through its subsidiary Whitebase, has just recently acquired another 10% of dollar. I think it was September 30. So Mayberry is quite excited and bullish on the fortunes of dollar. And if you know the history of dollar, I mean, the dollar brand actually started with Mark Croskery at Stocks and Securities. And I think it started as a Cambio. And then he bought a portfolio from the young gentleman, Kadeem. And, after buying that portfolio, I think he hired Kadeem as a CEO, and it started to grow. And then where dollar really took off was when First Rock put substantial capital into the company, because the company, like a lot of microfinance companies, they always have more loan demand than capital. So, when First Rock put in material capital, that's where you saw that growth. The fact of the matter is that, management executed, and we still think the management is pretty good at what they do. And as far as I'm concerned, if Dollar can work with their strategic partners in Mayberry to find more capital, I think their rate of profit growth is going to increase materially, if not substantially. And if and when that happens, I think the price that you see that the stock is trading now is relatively low. And that's why MJE would have added to its position, because we feel with a management team, with the strong board, with financing being put in place alongside the demand for credit, we think this business is going to do very well.
Thanks, Mr. Peart. Noting the increase in dividend income that the portfolio has realized, 13% increase over the year, are there any indication or any plans to increase the holdings in Supreme Ventures Limited, one of the highest dividend payer in the portfolio?
It's interesting. A lot of people think our position is too high as it is, but it has certainly done well for the MJE portfolio in terms of the dividends that the portfolio received from SVL. And as you would have seen, that dividend has been increasing over time, and it's the main reason the dividend income has increased in the portfolio. But one of the earlier questions, strategies in a bear market, you want to look at companies that have a very strong dividend yield and a potential for capital gain. The good thing for us is that SVL fits into that category, in terms of how they're able to expand and expansion of potential that's there, plus their aggressive 90% dividend payout. So, in addition to SVL, we have other assets in the portfolio that has a leaning on dividend income. And as I said, one of the other shares that we were excited about for the third quarter, NCB. It's the last commercial bank to start paying dividends again. And as I said, we believe that within the next 6 months, once everything is stabilized there, we wouldn't be surprised if they start paying dividends. And again, so we're positioned where on the face of it is mainly for capital gain, but if it turns faster than we expect, we can start to collect dividends on that as well, which would materially increase the rate of growth of the dividend in the portfolio. So, that's what we're on the lookout for. Companies that have potential capital growth and also strong cash flows in terms of dividends in these times, because that gives us more patience, more powder, as they would say, to take advantage of other opportunities as they arise.
And are we to expect any addition to the portfolio of any of the top 10 companies in the fourth quarter?
It's a function of the opportunities which are there. I still feel that there's some assets out there that may go a bit lower, and I think if they start to sell off, it then gives us an entry point, and wherever we see that, we take the advantage and we buy it. But in the same breath, if we see opportunities to liquidate and book a gain, we will also take that as well. So we always want to be in a position where we have cash to take advantage of opportunities, and I think with this market, there's a lot of them about the place, and if the market goes lower first and the price goes lower for certain shares, definitely we would want to take advantage of those opportunities. And the last thing I would say is, the beauty about MJE and the strategy of MJE is, I think when you look on the movement of the JSE index for the year, and the fall off in our equity, meaning MJ's equity, is relatively small. So you look on the material reduction in the activity on the market, the movement in the indice, but we're able to maintain sizable equity. So, we've lost $2 billion for the quarter, but we still have $17 billion in equity in the business. So, for those investors in MJE, it just gives credit to the business model, where some people think that because the JSE is illiquid, you can't find value there. When we listed MJE, we listed MJE, I believe, at around $7.70, I think it is. I think if memory serves me correct. And in a down market now, what's the NAV?
$14.76.
How much is that? About $7.70?
Almost double.
Almost double. So we have had different cycles, and the portfolio has doubled over the period. So we think this is just another cycle, and as we come out of it, we look forward to doubling the portfolio again. So, this is what investment is about. Take advantage of these dips so that you can sell when it goes higher.
It's important to note, based on what Mr. Perrott has said, that MJE is an actively managed portfolio. So wherever the opportunities are, the managers will ensure that they take the best position for the portfolio and also for you, the investors. I am not seeing any questions, so Mr. Perrott, I'll just hand over to you for the final word. Anything that you'd like to impart on our investors?
Well, for the shareholders in MJE, the quarter, a $2 billion loss, but at the same time, we look on the opportunity that is presented, and and this is why we started MJE, because we have to take advantage of times like this. You manage your liquidity, and this is when we use that liquidity to acquire shares at very depressed prices, because when the market turns and people are coming to buy those shares, the price is going to be significantly higher. We've balanced the downside by having a relatively good mix of dividend paying stocks, which will carry us through this period. And as I said, slow and steady wins the race. We're already 100% up over the IPO. We have $17 billion in equity. We have liquidity to take advantage of opportunity. And, I don't know if Asha had brought your attention to a graph that shows that the market price is trading at what's the discount to NAV now, Asha?
33%.
Yeah. So if you stop and you think about it, if tomorrow morning we were to sell the entire portfolio of MJE, we would receive what price per share?
$14.76.
And where's the market trading now?
$10.07.
So if you hold MJE stock right now and you were to liquidate all the stock, you will get an additional 33% over the market price. If that's not a buy signal, I don't know what else is. So if you want value, the stock to buy is MJE. Thank you.
Thank you, Mr. Perrott. So that's it for today's discussions. I'd like to thank our viewers for tuning in. Big thank you again to Mr. Perrott for this great discussion. If you're curious about updates on our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. So give us a follow to learn all things forum related. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, and remember, wise investors, slow and steady wins the race. Have a good day.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.